Hello and welcome to this video on financial management for electrical contractors. This question comes up quite a bit when I'm speaking with electrical contractors. They ask me, what do you guys do and how do you provide value to people like me? So I wanted to go through this. So again, a warm welcome. Just as a quick introduction, my name is Johnny Berrett with Berrett Consulting. We serve electrical contractors by providing accounting and advising solutions. So, where does financial management fit in as far as business departments? Us as business owners wear a lot of different hats, and a lot of times one of the hats that we wear is the finance hat. So, let's look at what that is. And I thought I would frame this as, um, you know, what a CFO does. What is the role of a CFO within a corporation? Because ultimately, they are responsible for financial management. So if we look at what they do, we can understand what financial management is. And I did want to note here that you may be handling many of these roles yourself currently in your business, depending on your business size. You could be handling pretty much all of this, or you could have different people on your team managing various aspects of this. But regardless of that, give yourself some credit for wearing this important hat. Um, so let's dive into it. So I just searched this, what does a CFO do? And it says they're a senior executive who manages a company's financial actions and plays a key role in strategic decision making. So here are some of the responsibilities that they have: financial management, financial planning, financial analysis, strategic planning, investment and financing, regulatory compliance, and communication. And let's look at these a little bit more with more granularity and how this might apply to you. So as far as financial management, overseeing the finance department and ensuring financial reports are accurate and timely. So you as a business owner, it could be that you're doing most of this yourself, or it could be that you're just making sure it happens. You have a person, a bookkeeper, an accountant, or even a person internally that handles this. But ultimately, you're most likely responsible to make sure that they are getting it done and that the information is accurate so that you can rely on that to make decisions. Financial planning, tracking cash flow and expenditures and developing financial forecasts. So a lot of times when a business is starting out, this is pretty basic. It's a matter of kind of keeping an eye on the bank balances and stuff like that. But as the business grows and there are more and more needs. A lot of complexity can come in, and a lot of cash flow is managing accounts receivable. So when you're getting payments in for invoices for services that you've done, and also controlling the outflow of money, so accounts payable. So, after incurring direct expenses for the jobs that you're doing, you'll have bills that are outstanding and managing um, the timing of sending those payments, and other things like, using a credit card and then managing when the credit card is paid off, with cash from your bank account. So that's kind of an example of cash flow, and it could be even a lot more detailed than that when you're looking at purchasing additional vehicles, let's say, of calculating things out of, okay, will I be able to make the monthly payment for this, and does it make sense? So some financial planning. And then there's financial analysis, which is analyzing the company's financial strengths and weaknesses and proposing corrective actions. Um, and obviously this is a very broad thing, but because there's so many things that are happening within the operations of a business, but the better the financial statements are, and the more detailed, the better the analysis can be, and the better it can inform the manager or the owner's decision making to change things. Let's say, for example, you're looking at overhead, and it's typical in the industry to have X amount of overhead. but your company is having, quite a bit more than that, then you can really di dive in and see, okay, well, what is making up um, this variance? Is it that insurance expense is high? Is it that just the leases on the building are kind of expensive because of the area that you're in? It could be many different factors. Maybe um, quite a bit of the employees' time isn't actually being utilized on jobs and going to cost of goods sold, but um, there's inefficiencies there, and the labor that's not being applied to jobs is quite a bit, and so overhead is high because of that. And again, the more detailed the financials are, the better the analysis can be to for that to inform operations of what changes can be made. And then there's strategic planning, which is kind of big picture things. Um, where's the business now? Where do you want it to be, and what are the steps to get there? So a CFO is an important role for helping with those strategic planning items, investing in financing, and regulatory compliance. This is actually a pretty big one, regulatory compliance. I'll just mention that for a lot of businesses, on a small to medium size, obviously a big thing of compliance is your basic, getting taxes done within the deadlines for income taxes and any other taxes if you have sales tax or anything like that. Compliance is something like sending out 1099s to of um, on time for subcontractors or anyone else that's giving services where they need a 1099 from your business. Another thing for compliance is if the business owner is required to file quarterly taxes. That's another thing that if the information is in the right place, then that can be done simply. And I will point out that while a CFO is responsible for all these different things, it doesn't necessarily mean that they're actually doing those things. For example, a CFO typically won't be filing a corporation's tax return. They typically have an accounting firm that's outside of their internal operations that would be doing that service for them, but the CFO would be responsible for it, just like you as a business owner probably have that hired out, unless you happen to have the skills of tax preparation and it's something you do on your own. Okay, so and then communication, CFOs will present financial information in a way that communicates the key information to stakeholders such as investors and boards. So yeah, that's just an overview, and I would venture to say that a lot of business owners, electrical contractors, are probably doing quite a bit of this, or at least overseeing it, but managing the team that takes on these various tasks. So that's why I put a note here. Your business is already handling all or most of this one way or another currently. And I pose these questions: what's going well? And then, what can be improved? What would you like to see improved or enhanced as far as the way that you and your team are currently handling financial management? Next, so back to the question of what does my firm do and how can we help our clients? So, I like to frame what we do in uh, level of service and skill. So we've got 1, 2, and 3. And so let's start with the bookkeeping. Everybody needs their bookkeeping to be done. It's basically mandated because everyone pays taxes, and so you need to have your finances in order so that you can hand it off to a tax accountant and they can file your taxes, or you can do that yourself by doing your own tax prep. And so bookkeeping, I think of and I define it as getting everything correct. So all of your bank accounts and credit card accounts, every transaction out of those has been properly categorized and those accounts have been reconciled in your file. A lot of people use a QuickBooks file, for example. And so the reconciliation is when a bookkeeper will go in, they'll compare everything, the ins and outs of money on your statements. They'll compare that to what is in the bookkeeping file and make sure that it's all tying out. Another small example is for a vehicle. If you have a vehicle and also a loan on the vehicle, then the vehicle needs to be recorded as an asset on the books, and then the loan payments are going to be recorded with the part that's for principal going to principal and reducing the loan on your balance sheet, and the other part being recorded as interest expense and being expensed on your profit and loss in each period. And so that's just an example of what bookkeepers do. And the end result is that you have a file, a QuickBooks file, or whatever financial statements that are accurate according to all the financial activities that the company has done and its accurate position of things, all of your assets, all of your liabilities, and the equity in your business, as well as how it performed from a profit and loss standpoint, so that at the end of the day, the tax preparer can take that information and file a tax return that is true and accurate. Okay, so next step, and this requires a different skill set, is operational accounting, I would say. And another way to term this is managerial accounting. That's where not only is the bookkeeping done, because that's level one, but on this level two, um, we're going to take that information, not just make sure that an expense is recorded as an expense and an income is recorded as income, and an owner contribution or draw is recorded accurately, but we're going to add additional color and context to those transactions, and we can do things such as job costing, where for every single job or certain types of jobs we do, we're going to put all the revenue, all the expense in that job so that we can see how it performed compared to what we wanted it to perform as or what our budget was. So that's just one example of a managerial accounting. Another thing is if we do commercial jobs and we do residential jobs and construction, and we want to keep those separate, we can record each of those types of transactions into their respective categories as classes, commercial, residential, and then when we look at a profit and loss statement, we can see how are we doing profitability on the commercial jobs versus on the residential jobs and split it out. So those are just small examples of what operational accounting or managerial accounting can do. Okay, and excuse me, on this next part, level three, that's what I'm calling advising. So, and the difference between operational accounting and advising is that for operational accounting, we're typically looking backwards. We're looking at what already happened. And of course, that historical information is going to inform decision making so that we can change things in the future. But advising, which is forward looking, is going to take it a step further where, um, you know, we as accountants and advisors can consult with our clients and ask, okay, what are your goals and objectives for, let's say, 3 months down the road? What type of revenue do you want to earn, and then over the next 3 months? And then based on that, we can fill out a budget of what are the anticipated revenue, what is the anticipated expenses. And because of planning for this, we can also ask, okay, so for this to happen, for us to hit this target of revenue, what are the leading indicators? Because of course there are leading and lagging indicators. Accounting is largely looking at lagging indicators. But with accounting, we can decide what are the leading indicators that we should measure, such as, you know, our marketing and our marketing performance, how many leads we're getting. Of those leads, how many are converted? So we can say, all right, for this target revenue, what are we getting for our existing revenue? How many leads are coming in? So in order to get this new revenue, if we keep everything else the same? How many additional leads will we need and customers um, to service in order to attain our goal? So as you can see, advising uses these other things as a foundation, but the type of service that it is a little bit more advanced and requires more skill level on the accountant side. Um, and so uh, these are the types of things that we can do. It's pretty broad, as you can see, but um, ultimately it's focused on the client and what their specific goals are, and then how we can take our skill set and kind of match those up so they can achieve their goals. Okay, so I wanted to talk a little bit about results for clients and for my own business. So I had a client call this week with my team lead, and it was a monthly financial review where we take the data, we prepare all the data to present to the business owner, and we had a good time going through and reviewing, and it's it's interesting how these calls go because there's a lot of preparation that myself and my team lead do ahead of time so that we're ready to answer questions. We have reports pulled up that we can share and so forth. Um, but a lot of times, and I think the greatest value in these meetings is just kind of the back and forth and the conversational nature of the meeting where the business owner can make comments or share their insights into the financials, and we can share our insights. And ultimately, it's we're just able to draw out a lot of things that I think helps the business owner make decisions and think about things um, as they move forward. Because if the same business owner, like if we never had this meeting that we had, they wouldn't have been able to surface like, oh, what's my profitability? And they were asking us questions on like, okay, so with this let's say extra cash, what would be a good way to invest this? And on top of that, me and my team were able to come and bring thoughts that I don't think he would have been thinking about, such as, okay, 1099s are going to be due in January. This is how it was done last year. Um, what would be the best case scenario? How do you want to handle it leading up to the end of the year to be prepared that that will be a smooth process with the processing your 1099s. Um, and this client happens to have a business unit outside of the United States, and they have accountants who help with that. And so that's another thing we do is collaborate um, with that team and with our client to make sure that the projects are moving forward, not only the ones that we're working on, but the project in conjunction with them and the tax accountant for our client. So we can ask questions about that, make sure that everything is done on our end to make it really smooth for their goals of filing their tax returns, having everything complete, and really just connecting all the dots. So I thought it'd be worthwhile to just share a little bit about that meeting with you guys for you to see what happens. And then I review my finances every single month to see the business operations and financial reporting enhancements that I might need to do. Something I do is project costing. So each project for each month, I'm going to be putting in, and obviously there are tools to help with this, but each project I'm have the revenue. I assign costs um, to do the service, and then so I can see how profitable each thing is. Um, and recently, I've wanted to kind of implement a revenue by segment thing in my business, and just had some other ideas like, okay, I want to be able to test and measure like how effective my marketing investments have been. And so I have a way on my financial reports of seeing what are the inputs and what are the results, and how are things going with this. Um, so I wanted to share that with you as well. Okay, so what about you? So here are some ideas for you to improve your financial management now. Um, without making any gigantic changes, here's something that you can do to just improve, because I believe in incremental progress. So the first one is improve your financial reporting for clear insights by using your existing team and system. So kind of going back to earlier in this conversation, I was saying that, most likely all these different financial tasks and financial management things that are that I mentioned are most likely being done by you or someone on your team already. So take what you're already doing and maybe improve it a little bit more so you can get some more clear insights into the business operations. Um, one important thing, at least for me and what I have seen in my clients who take the time and make it a priority, is review financial reports monthly. And you could recruit an accountability partner to maintain consistency on this. I don't recommend you do this on your own. I recommend that you at least have somebody that you either review your financial reports with or that knows that you have a goal to review them monthly and they hold you accountable to it. And so if you already have someone on your team, maybe just set it up as a goal between the two of you. Hey, by this day every month, we're going to have everything in and we're going to do a review together. And then another idea is, you can ask your bookkeeper, accountant, or CPA, someone you're already working with, to do some analysis and have a conversation about that, about about your finances with them, to see what insights they would have, and that will probably trigger some questions that you could ask. Um, and so just taking something that you're already doing, something that you already have, and just kind of leveraging it to help you in your business, to give you some insights that might be helpful. So those are just a few ideas. Go ahead and give it a try. Let me know. So the last, we're getting towards the end here. I wanted to say an investment in your financial management is actually an investment in yourself. Um, there's this whole idea of are things a cost or are they an investment? And I was listening to an audiobook just the other day, and a businessman was talking about how he doesn't see his team as a cost. Someone was asking, "Oh, wow, you have like a very high payroll. Like, does that make you nervous that you have that big of a cost and outflow each month?" And he said, he asked them, "Well, what do you mean cost? That's not a cost." And they were kind of confused and said, "Well, payroll, it's a cost, right?" And he said, "No, that's an investment. That's my team. And everything that the business does, all of the success that we have is because of my team. And I see it as an investment. It's not a cost to me." And so with that in mind, um, the time and energy that is put into financial management is an investment because it can pay dividends in helping the business owner or manager understand operations and make things better. It's that feedback loop. So I have a question to pose here. What is a potential loss if nothing has changed? So however you're doing things right now, uh, first of all, if it's not 100% exactly how you want it to be, what is the potential loss if nothing is changed? So I have my trusty calculator here, and let's just do a quick calculation. So let's say a business currently is doing $1 million of revenue, and after paying after all costs and everything, the profit to the business owner. Let's say the business owner is paid through payroll, and so after all that cost and everything, let's say the profit margin is 5%. So the business is doing $50,000 a year in profit. Okay, and let's say the business owner invests time in themselves and in the financial management and decides, hey, let's take this and even if the revenue stays the same, let's just change our profit profile from 5% to 10%. So let's double the profit from 50,000 to 100,000, which comes out to about um, you know, 8,000 a month versus around 4,000 a month. Okay, so so by investing time and energy, there's a big potential there. And so just this could be an exercise for you to walk through and see, okay, what are my numbers? And if I make some tweaks and changes, how can that really impact my profitability? And so in conclusion, financial management is an important pillar of every electrical contracting business. These roles are being handled one way or another currently. We talked about some ways that how a great accountant can assist with those roles. And ultimately, your investment in financial management is an investment in yourself. So I hope this was valuable for you. I just wanted to say a big thank you. And I also wanted to mention that I'll be launching a new offer soon, which is to do a one-time checkup on financial processes and performance compared to industry benchmarks. I'm really excited about this. I think there will be a lot of value for business owners to just get an insight of like what are my current processes? Are they, which ones are strong, which ones may need a little bit of improvement, and then how are my financials comparing to others in the industry? So I'm really excited to be putting this out there. I'm not totally ready yet, but there will only be a couple spots this month. So if you want to be the first to hear about this, please go ahead and send me an email with checkup in the subject line. Just email johnny@johnnyberrett.com, spelled Jonny, and then at JONNYBERRETT.com. Love to hear from you. Thanks so much, and hope you enjoyed this video. If you have any comments, please feel free to comment below, and I hope you have an awesome day. Bye bye.